Good day, everyone. So today I just wanted to talk about something which is the highs and lows. You know, I've noticed that sometimes, especially when you're still beginning as a trader, when you go to baby pips and other strategies, majority of them, they always used to tell us that highs and lows are made by V's, okay, like this. This would be a low, right? And then this would be a high. So most people were taught that this is how a low should be and the high should be, all right? But this is wrong because when they show you this on a paper, sometimes they never really show you how it looks on a chart, you know. And sometimes they can show you a line chart where it just shows you this is the high. This it looks like this, but they don't show you exactly how it looks on with the candles because normally when I teach, I never use the line chart. I'm always using the candles because we want to see price moving. So this is really false. This is false. Price doesn't make lows by a V or this V like this or like this one, right? Whenever price makes a lower high, we are always looking for a double V. All right, like a double V, something like this, or something like this. That's what we're always looking for, you know. We always want liquidity to be taken out because that liquidity is going to be used to push price down or push price up. You know, this is the reason why I also stopped when I began. If you go to baby pips, they will always teach you about the pin bar, I think, or the doji. So when they say, when you see a doji, then you need to buy and sell. But how many times have you sold on a doji or pin bar and they came back and took you out? So many times. Okay, so many times. So what I want to show you is that I want you to think different. I want you to stop thinking about highs and lows from what you were falsely taught, as in highs and lows are just V's, but no, but they're supposed to be what double V's. All right, and you always want price to take out people, especially the ones who do formal, those early buyers and sellers. All right, that's what you always want to see. So, for example, if you look at this chart here that I have, right, this, if I were to zoom in here, or even here, just here, if you look at this high, right, this high, this was the first high. Okay, so like I said, most people are taught to what this will be the reversal. But then what happened after that? They came back and took them out. You see what happened here? All right. So they were early sellers here. Now, if you are someone who likes to have big stop loss, let's say your stop loss was way bigger, somewhere up there. Now, yeah, maybe you'd have been safe. But for most of us, we don't put those big stop losses. All right. We never put those big stop losses. And see what happened. So, like, that's why I was saying that you always want price to take out all the highs and lows first before you buy and sell. Always. Looking at this low here, you see what happened here? There was a first low here. Okay, this is why I need you guys to stop thinking about the doji and pin bars as reversals, because they're trap zones. Most of the time, they're trap zones. Majority of the time, this pin here, I was taught that when you see pin like this is rejection. Price is rejecting going down. But then what happened after that? They went down and took those people out. If I had bought here, they would have taken me out. And if I'm someone who doesn't have proper risk management, that would have been bad. I would have blown an account. All right. So as you can see here, it was also the same thing. It's like a double V. They took out what stop losses first, and then now price goes up. Same here. They made first high, which is what we call engineered liquidity. Right, that was the first high is always the engineered liquidity. Whenever price comes back to your level where you're expecting a reversal, whether a high time frame or lower time frame, you always want to see people taking out first. Wait until they've taken out some stop losses first. Then you can enter. That's a safer entry. Okay, that is a way safer entry. So those guys here were taken out. All right, let's look at this level. There's a reason why I marked this order block. You see this order block here. You'd be expecting a buy here. Let's go to the lower time frame and see what happened. If you go to the lower time frame, look at this. Like let's use the things that I was taught before I came to ICT. I was taught that if you see rejections like this, you buy. The moment you see one or two rejections, buy. Now, as you can see what happened here, you buy here, they take you out. You see another one, another rejection. You buy again, boom, they take you out. How many losses? So many. All right. So this is why you need to always wait for price to take out stop losses first before you move, before you buy and sell. Okay, be very careful if they haven't taken anyone out. Be very, very careful. Okay, ask yourself why. Why would they just move? Why would they reverse here without taking people out? No, it's a trap. All right, it's a trap, and they can do that even for days. They can come and make a high here today, and then come down. Then the next day come and take you out, or they can even drag it. They can drag it like this, drag it for like 2 days, and then you are thinking, oh, now we're going to sell. The next thing, boom, and then they drop. All right, so always be careful. So we always want to see what a double V whenever price is reversing. Same thing here, as you can see, price came back here. This was the first high, then they sold, and then they came back and took out this high. Someone would have moved their stop loss by now. Yeah, you'd have moved your stop loss somewhere here, and the next thing, price went back and took you out. All right, let me go back to 4 hour. Even here, the current market structure, price here, same thing. First, I don't know what you call this candle, right? Another rejection, price goes up, comes down, take you out. Another pin or doji reversal, you take it, and again, boom, they take you out. Then price goes up. So you would have been taken out twice or 3 times, depending on how many trade positions you'd have put. And this is the reason why sometimes people are losing a lot of money. We are losing so much money because we never taught the rules. All right, we never taught exactly the rules. And they know that. And the market makers, the banks, the big guys who control the market, they know that we are impatient. We are very, very impatient. We want to make money now. No one is willing to wait for price to make a complete setup. Because you want to go out, you want to go watch a movie, whatever you want to do. You want money now. You are thinking about your family. You are thinking about, you are also looking at the one that I call the shiny object syndrome that I spoke about last time, that you are looking at other people, all right, who are making money. Some of those people have been trading for 5 years and you have no idea that they've lost a lot of money, and now they've made it. They've fixed their psychology and everything. Now they're making money. You are still on level 1, but you want to compete someone who's on level 5 or level 6. It will never happen like that. It won't work. It won't work. That's why I always say, don't compare yourself with anyone else. Never compare yourself. Because someone who's on level 6 and you are still a level 1, you can't compare yourself and say, hey, I want to beat that guy. No, man. You still have to go from your level 1, 2, 3, 4 until you get to 6. There's no way, especially whether it's business or Forex trading, you cannot skip the process. You can never skip the process. Same as school. You cannot go to grade 1 today and tomorrow you're now in grade 7 or you're in high school. It's impossible. Okay. No matter how smart you are, there's no way someone who's 10 years old will go to university, or someone who's 5 years old. no matter how smart they are. All right, you have to go through the process. But some of us, we are so impatient. Okay, so impatient. So like I'm saying, like we always want to see people taking. Don't succumb to FOMO. All right, you always want people to be taken out. Even here, look at this also. There was a first high, and even that high was taken out here. And that same high was taken out the next time when price came back. They took them out again. Let's look at another example. Other examples. This applies to every time frame. Doesn't matter which time frame you're using. Every time frame. Okay. Another one here. This was a high. Some people would have sold here. Next thing, they were taken out. All right. Sometimes your V. Okay. There are certain times where price can make a V. Okay, as a reversal. And they'll be, when that happens, it means they'll be taking out an old high, like a very old high. For example, you see this one here. If I go to the daily, right, daily on EU, this was a V, right? This was a V. And I know someone will be asking, but there was no double V here. Well, if you look at it, they took out these guys here, that old high here. Those guys here who were sold here, all the people who were selling here on this resistance, they took them out. So sometimes the V can be also a way to buy and sell. If they take out old highs and lows, they have to. They have to. Okay. This one was also a V. Okay. But we would use as a buy. Why? Because they took out all these lows here. Some people were, I don't want to use the F word. But anyway, yeah, some people got messed up here. They took a lot of people out here. Right. And even this first high here, this V here, they came back again and they took it out. Okay, let me put a straight line. If you look at it there. Okay. Price made a high, came back, made another high, a double top. What are people taught about the double tops? They always told when you say double top, you sell. When you say double bottom, you buy. What happens next? They took them out. If you had sold here and then you move your stop loss, boom, they take you out and they drop. And they drop. You see? So I want you to start thinking of your reversals in a different way. You always want people to be taken out. Before you do anything, let them take out people first, traders first. They took out these highs first and then they dropped. Okay? Came back and gave us this high. They came back again and took them out. Okay? Before they made this low, there was a low here, this low here, and then they took them out and then price goes up. They also took out some old lows here. You see? Even looking at this one here, look at this. These lows here, some people would have bought here. They'll be like, oh, rejection, rejection. So let's buy. And then boom, they were taken out. Then price goes up. All right. And if you look at it, it's sort of like a double V. Double V. So the thing is, I noticed that when, especially if you did BTMM, yes. BTMM always talk about double V. They'll be like, oh, just when you see this, just buy and sell. Or when you see something like this, just once you see a M or W, just buy and sell. But they never really go deeper into it, like exactly what is happening here. What exactly is happening inside here? Most of the time, they won't really go deeper into it, you know, and explain. And sometimes they can give you this, right? I've noticed that sometimes they'll give you this, and then they'll go back and take out that old high again. And I'm wondering, but how come? I was told to always sell on an M or a W, but they went back and took me out. What's going on? All right, until I understood, until I let ICT and started to understand exactly what happens. Okay, this is how they trap you. Even here, as you can see, price goes up, made a high, came back down, they took them out, then they drop. That's what you always want to see. Even here, they made a low, goes up, came back down, took them out. Then look at this bullish momentum. All right, this was a V, yes, this one here, but this V, it wasn't just a normal V. Look at it. Look at this. They took out that old high. They took that old high. So price will rarely turn around without taking out traders. They really do that. They will always take out traders first before they move. Always. Even here, made the low, took them out, price goes up. Made some high, took them out, drop. Price will rarely move without taking out stop losses. Because that's what they need. They need that liquidity to move. They need it. All right. Even here, currently, like on Monday, they made a low. Look at this, took it out, and then price goes up. Look at what's happening here. This was the high. Some people, they sold here, and then look at what happened. Boom, they were taken out today. Look at that big candle. Look at this big candle here. This is taking out stop losses. All right, so that's why I'm saying that you always need to see what a double V. Okay, be very careful. Be very, very careful. Okay, whenever price reaches your level of selling or buying, you always want them to take out stop losses first. That's what you want to see, okay, before you take your trade. Either they will engineer liquidity, then they take out the new traders, or they'll be taking out old highs or old lows. This happens on every pair. Okay, doesn't matter which pair you're using or you're trading. If you look at this one, let me clean this. Yeah. Okay, same here. First low, taken out. Second low, rejections, which we are told to buy, took them out. Another low, took it out, and then now price goes up. I remember I used to I lost a lot of money doing this. I would buy here, then they take me out, and I'll buy here again, take me out, and I'll buy here. Then once I'm now frustrated, and then now they reverse. It was so frustrating. Even here, a high, took it out and drop. So that's why Forex is an emotional game. It's a mental. It's mental. You have to make sure that you have your emotions in check. Because if you don't, I'm telling you, they will mess you up. Same here, we have a low, and then they took that low out, and then price reverses. Okay, we have a high, short-term reversal, came back, took it out, and then they drop. So before they always do the big movements, there will always be stop losses that are taken out. Before there is a big movement, you should expect price to take out some stop losses. Okay, before this big reversal here that happened here, there was this high and they took it out. There was this high again and they took it out. There was this high and they took it out. There was this short-term high here and they took them out. Okay, with this low, what happened? They took out, let's see. They took out that low, and I think maybe this low. Let me see, let me clean this. Let me just check. Yeah, they did, as you can see here. Took out that old low. This high here, if you say is a V, it took out all these highs, all those old highs there. So as you can see, you always want price to take out stop losses. Okay, so that's why that's why I did this teaching for everyone to start thinking differently whenever you look at the price, whenever you look at reversals. You know, you want to see a double V before price reverses. Now, if you want more, okay, you can just join the mentorship. How to know which areas price will reverse, how to know which areas there'll be trap zones. You can just join our mentorship. Okay, you can just look at the pinned message in the channel and then look at the package that you want. Then you can contact me anytime. Then we can begin the mentorship and I'll teach you everything. Okay, so yeah, so this applies to no matter what time frame you're using, it applies to every time frame. All right, so that's all for this week. Enjoy your week, guys. Take care. God bless you.